A very good evening to one and all present here. We have with us our CIO, Mr. Sunil Damania, in today's event. With increasing inflationary pressure sending a panic wave across the market, our CIO would be breaking down about the latest US FOMC meeting outcome and how will it impact the Indian markets. Towards the end, we'd also be having a brief Q&A session. Simply drop in your queries in the chat box below. Over to you, Mr. Sunil.
Hey, thanks a lot, Jason, and very warm welcome all of you. I know a lot of you people must be really concerned about what's happened in the market and what we have been predicting almost 6 or 7 months back that Nifty can go to 15,000 to 15,500 level, and today we did breach that 15,500 level. And the reason why we did that, because yesterday something happened in the US. What happened? The Fed announced 75 basis point rate hike yesterday. If you remember, in the month of May, when Jerome Powell was asked time and again, is 75 basis point is on the table, and he clearly defined no. But if you remember, at that point of time, I did very similar kind of webinar the way I'm doing today. Post-Fed, which was happened in the month of May, I did predict. I don't know how many people can remember, but I did predict that the next rate hike would be of 75 bips. And that's exactly what has happened. So those who have not attended or have attended but forgot about it, can I request, Jason, can we very quickly play that video so that investors can understand? And I'm going to do something very similar today also. I'm going to predict what would happen by July in the next Fed policy. So I'm going to do that. But before that, let's run through very quickly what did I predict post-Fed meeting of month of May. Jason, can you please?
Yeah, let's quickly skip to the video.
Yeah. And I think that's a one statement makes me believe that future rate hike could be as high as 75 basis point. While Jerome Powell ruled out, and that's the reason why US market went up substantially, I do suspect, based on the language that Jerome Powell has used in the press conference, I see a strong possibility we see Fed hiking as high as 75 basis points in next couple of months. Remember, it's a challenging environment for someone to predict beyond 60 to 90 days, and Jerome Powell also admits that there are so many moving parts in the world economy, one doesn't have a visibility beyond 60 to 90 days. And that's also been admitted by the Fed chairman, despite he has so much data at his disposal. When Powell was asked a question, is Fed is behind the curve in terms of hiking the rate of interest, his answer was firmly no. He said that there will be a soft landing. So I hope you understand what is soft landing and hard landing. And I hope you must have read my blog, which I wrote yesterday. It's available on our website, where I did talk about soft landing and hard landing. Now, Jerome Powell believes that there will be a soft landing. In other words, when it hikes the rate of interest, it's not going to slow down the US economy, and it's not going to go into recession. So that's why he's using the word soft landing. Without hurting the growth, GDP growth, they will be able to taper down the inflation. There are many people, experts, including Jamie Dimon, which says that from JP Morgan, there is a fair possibility that it could be a hard landing. And market will keep dancing on the news of whether you believe it's a soft landing or hard landing, and hence US market will remain little choppy going forward. So yes, yesterday market did celebrate ruling out 75 basis point hike, but don't assume this rally is going to get sustained going forward. As you have seen, how that prediction was on the dot in terms of how did we predict last time, and I'm also going to make. And sometimes you people don't give us the credit that which is fully deserved, because we did many prediction right, whether it was should we apply in the LIC IPO, should we invest in the cryptocurrency, and I think one question that people kept on asking to us in the month of August, September, and October, and if I remember, I think it was Kevin who used to ask us about the cryptocurrency, should we invest, not invest. Many times you people ask us about IRCTC and so on and so forth, and every time we did guide you in terms of what needs to be done with this, and rightly so. So what I'm going to do today, I'm going to discuss again what Fed has announced yesterday in the meeting and what kind of implication it will have on the Indian equity market. But before I begin this webinar, just a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance is no indicator of a future returns. So with this, let's try to understand what happened yesterday. Just to reject the memory, that Fed hike rate by 70 basis point, which is the highest rate hike since November 1994, and that was done by Alan Greenspan at that point of time. This 75 bips point rate hike has come on the back of 50 bips hike that we saw in the month of May and 25 bips that we saw in the month of March. So from March till now, we have already seen 150 basis rate hike from the Fed. So March, April, May and June. On 4 months, Fed has gone and put an accelerator on the rate hike. Remember, this is the same Fed which was saying that inflation is going to remain transient, and we have been saying on our webinar that inflation is going to remain persistent. If I'll try to dig out that videos also maybe in the future webinar where we can we can show you how consistently we have been saying that inflation is going to remain persistent, and somehow Fed made us believe that it's not going to be. One of the reasons why Fed has put his leg on the accelerator, for the very simple reason, inflation is at 40 years high. And I can tell you with a lot of confidence that very few, those who are attending this webinar in their investment career would have seen this kind of an inflation in the US. As Mohit was saying other day, that this is the first time, not the first time, but maybe in many years or many decades, the India's inflation is lower than the US inflation. So what has happened yesterday? See, this is how the market behaves, and sometimes you people get carried away by the short-term market movement. Yesterday, what happened to the US market? US market moved up, and it moved up post the conference of Jerome Powell. Something similar happened in the month of May also, and that's what I mentioned, that we don't expect the market to sustain the higher level. That's exactly what has happened. Am I right? Though markets sometimes behave in a very funny manner. Well, and as I speak to you, while Dow, Nasdaq and S&P 500 were up yesterday, today they all are down. One thing which has come out very clearly in yesterday's Fed meeting is that somehow Fed has made a commitment now that inflation to bring down to 2% is non-negotiable. Come what may, they will do whatever needs to be done to bring down the inflation to 2%. And when Jerome Powell was asked about what could be the quantum of future rate hike, he said he doesn't expect move like this to be common. He did mention and he did admit that next rate hike would be 50 basis point to 75 basis point at the next meeting. The next meeting is in the month of July, which is next month. This will again increase the rate of interest to 225 basis points. One thing which Powell admitted and which he also said in the last policy meeting also, that inflation is going to remain high in the short term. So don't expect inflation to go away in the near future. And it will come down sharply in next couple of years. Next couple of years. So no one believes that inflation is going to go down in a hurry. What did Fed say? That despite this rate hike, he believes that US economy is strong enough to take on this rate hike and the quantitative tightening, that is called QT. That's what he believes. And he also said, so remember, US two-third economy is consumption, am I right? And he mentioned that consumers are in good shape in financially and they are spending. But while they are spending, he did admit that consumer confidence is low. Two reasons he cited. One is due to the high gas prices and lower stock prices. So remember, I think it's a very important statement to understand. People normally slow down on their spending when the stock market is down. That has happened in the US and that can happen in India also. When market goes up, people ability to spend just looking at the portfolio. So even though it's not realized profit, people will spend more money, thinking that one day eventually they will be able to book profit. So it's work psychologically. Profit which is not realized, but if you see your portfolio, your tendency to spend more money is little high, and when the stock prices goes down, your tendency to spend money less goes down. That's how it basically, yeah. But Jerome Powell believes that he doesn't see a broad slowdown in the economy. He continues to, when he was asked about soft landing, he said, and you must read this statement, he says, events in the last few months have raised the degree of difficulty of achieving a soft landing. There is a much bigger chance now that it will all depend on factors we do not control. What are the factors we cannot control, like Ukraine and Russia and others, so and so forth. And he said he doesn't have a clarity. But he sounded a little optimistic that even though the economy will slow down, but it will remain at the healthy growth levels. So he doesn't expect recession, in other words. Whether we agree or not, I'll come that to a little later in my presentation. But he doesn't believe that the economy will go in negative growth because of this quantitative tightening and 150 plus next 50 or 75 basis rate hike. That's going to happen in the month of July. Fed do admits, and if you look at my prediction that IMF has given, it is much optimistic. They will be forced to bring down their prediction. Real GDP growth will run below 2% through 2024, not 2022, 2023, but 2022. What has happened is that in the US, the unemployment rate is at 50-year low. Inflation is at 40 years high. Unemployment rate is a 50-year low at 3.6%. And Jerome Powell admits, for every 2 job vacancies, 1 person is actively seeking a job. So you can imagine how much more demand for the employment and there is less supply. The Fed believes that the personal consumption expenditure, that is PCE, retail inflation, expected to be 5.2% in 2022. It will sharply come down to 2.6 in 2023 and then to 2.2% in 2024. The target is 2%. So even in 2024, it will remain at 2%. What Fed wants to achieve and what is an ideal scenario Fed wants to do? It wants to have unemployment rate above 4% and inflation below 2%. That's the broad Fed wants to achieve an objective, and that's the reason it is doing quantitative tightening and the inflation rate. We need to wait and watch whether this happens or not. If you ask me, I doubt that Fed would be able to do both this thing simultaneously. What that thing? 4%, above 4% unemployment rate and below 2% inflation is not going to be an easy task that Fed is able to do that. So what is our sense after reading and after going through what Jerome Powell said and whatever limited understanding? See, remember, I'm not an economist. Okay. But somehow I do get a feeling looking at the data points which I've gone through since morning on the US economy and gone through the transcription of the press conference that took place of Jerome Powell with the media. There is a high probability that US economy will do a hard landing. That's a prediction number one. And the next meeting that is there on 26th and 27th July, there could be another 75 basis rate hike from the Fed. So 75 bips. Yesterday, you should all brace for another 75 bips rate hike from the Fed on 27th July. So mentally be prepared for that. If you remember today, even the Bank of England hiked the rate of interest only by 25 bips. But they have gone on the record that they can go a little aggressive going forward. So let's look at what is happening with the US inflation. The reason I'm sharing this data, and if you remember when I did a very similar webinar in the month of March, I did mention it's extremely difficult to control inflation. Inflation is like a toothpaste. Once it's out, it's very difficult to put back in the tube, isn't it? And I think central banks across the world will find it a little difficult. If you remember, RBI last month hiked 40 bips rate of interest and another 50 bips in the last monetary policy, and we should expect more in the coming months. Can you imagine the inflation of US? And human memory is very, very short. 1.4% in January 2021, and for the month May 2022, it's at 8.6%. Look at the sharp rise that we saw in the inflation very quickly. Can you see this? And that gives an idea that how inflation can go out of hands. And that's one of the reasons Fed did realize it's behind the curve, and they did 75 bips. There was another possibility that they could have also done 100 bips, but they did not do it. And is this not the problem only for the US economy? I think this problem is across the world. US 8.6, this is all data for month of May, except Japan, which is for the month of April. UK 9%. European Union 8.1%. Japan 2.5%. China 2.1%. And China, I think yesterday when they announced, they kept the rate steady after lowering the rate of interest. Okay. China also, the inflation is nudging up as I speak to you. Russia is 17.1% and India is 7%. So US and UK and the European Union, inflation is much, much higher than the India. If you look at the US GDP real growth rate, 5.7, the projection is that 3.7, highly unlikely. I am again making a prediction that IMF is overshoot the projection for the US economy. it would be challenge for the US to grow even at 2%. And I think this second half of 2022 would be extremely difficult for the US. So maybe 2% may be fair enough, not beyond 2%. That's what my sense is. So now, how do we see the more rate hikes from the US Fed? There'll be 4 more meetings after yesterday meeting. And we are making a prediction. This is my prediction, not Markets Mojo prediction, so you please take it with a pinch of salt. On 27 July, Fed would hike 75 bips rate hike. On 21st September, 50 bips. On 2nd November, 25 bips. And on 14 December, 25 bips. In other words, I'm expecting another 175 bips rate hike from the Fed in the next 4 meetings of 2022. We have seen 175 basis point till yesterday. I'm expecting more 175 bips rate hike from the Fed. So Fed is not yet done with the rate hike. That's what I wanted to convey to you people. Fed is not. So please brace for more volatility in the days to come. Now the question comes, whenever US Fed rate hike the rate of interest, what happens to the rupee? Does it move up, move down, kind of stuff? What we have realized, and it's a little counterintuitive, isn't it? Okay, whenever US Fed rate has gone up, the rupee actually remained more or less stable. For example, in May 2024, can you see this? 5.525%, and the depreciation rupee is only 1.2%. But when the Fed reduced the rate from 5.25 to 2.5, the rupee depreciation was much higher, 20%. Logically, when the rate of interest goes up, the rupee should depreciate more severely, isn't it? But that's not happened. And till now, since March, the rate of depreciation only has been 2.1%. So I think that gives an idea that not necessarily whenever the interest rate goes up, there should be significant depreciation in the rupee. But we do believe that rupee can go to 80 by August 2022. What happens to the market? I think this data we need to draw some lessons from the past. Okay, whenever Fed has hiked the rate from 2004 to 2006, actually market went up 121%, 13% in 2004, 2005 42%, 47%, culminating into 121%. Whenever the rate of interest has moved up 1% to 5.25%, which has happened from June 2004 to June 2006. Something similar happened between December 2015 to 2018, where the growth, the hike in the rate of interest was more gradual, not very steep, as what we saw from 2004 to 2006. And at that point of time, also index did move up from 26,000 to 36,000, appreciation of 38%. So general belief that when rate of interest goes up, rupee depreciates. That's not true. And of course, rupee do depreciate, but not as severely as what would have imagined. And not necessarily whenever the Fed going to hike the rate, Indian market will perform badly. Both this are a wrong assumption that investors make by these two live example. So how do we see now market post this rate hike? Nifty did come down to 15,000 to 15,500 level that we have been predicting for quite some time. And today Nifty did close at 15,360. Are we done with the choppiness in the market? The answer is no. Market will remain choppy even going forward. And we continue to believe that market will remain choppy at least till August or September. And by October, market should stabilize. Now taking a cue from what has done by Fed, I think RBI will do rate hikes in the coming monetary policies. Not one, but couple of more. We continue to believe that rate-sensitive sectors will underperform. Why? Because we do expect rate hikes, not only what has happened now, but going forward. See, the reality index has underperformed very significantly. We did one exclusive webinar. We did warn you, don't park your funds there. Capital goods sector will also come under pressure. Some of the industrial metal will also come under pressure. And see, now you people were blaming us, when Vedanta, we asked you to exit, Tata Steel, we asked you to exit. What happened to those prices? Did they move down or moved up? So sometimes it's good to book losses. Don't get carried away by the human emotions. Otherwise, your portfolio will underperform. My suggestion that we do expect capex cycle to go in a slow lane mode. People will either defer their capex or may cancel their capex. Two things: global slowdown in the global economic slowdown means more supply, less demand. If that is so, why should you have a capex? And second thing, higher cost of borrowing means your break-even level is going to go a little higher, which many entrepreneurs may need to revisit that. We continue to believe that every rise in the indices will meet with the stiff resistance. So don't get carried away by a couple of days hike in the indices. Market will remain choppy. If you remember, I suggested very similar when the Fed hike 50 bips rate hike in May, and market did move up post that, and I did warn you that something similar I'm warning you. And I must also warn you one more thing. If you think that if the market is going to go up, your portfolio will also go up, the answer is no. Many of you will underperform very significantly in the next leg of bull run, because you would continue to hold the same old company which you think or which you believe is going to participate in the next leg of rally, and probability is very high it's not going to happen for all of you. So in case if you are very serious about creating wealth, and if you really wish to find out which companies are going to participate in the next leg of rally, then my advice is that becomes a Mojo professional subscriber. We have a very good track record of predicting macro factors, sectors, and the companies. If you remember, we did mention that HDFC Bank is going to underperform. It did underperform. Last 3 stock of the month, despite market has been so choppy, has given positive returns. All this you can get only at 14,999, and that's also for 2 years and 3 months. What does it work out to? 550 rupees per month, less than 20 rupees per day. It's a small price that we are going to pay to ensure that your portfolio in equity portfolio outperforms in medium to long term. If you think that I can manage on my own and I'll be able to create wealth, I'm afraid, sir or madam, you will not be able to do that. You will see a substantial erosion in your equity portfolio. Even if the market goes up, you will not see that reflecting in your portfolio. So my request to all of you, don't be penny wise and pound foolish. Take help of professional advisor like Markets Mojo for your wealth creation journey. Only at 14,999 for 2 years plus 3 months, and then you get research on all 4,000 listed companies, verdict on each and every listed company, switcher if you want to know if I wish to guess, should I continue to remain invested in this company or not. If not, we will suggest you which company you should move into and how many shares you should buy. Then we have a powerful screener on our website. 10th of every month I release one stock of the month that you are eligible for. We have a beautiful mutual fund section that is included in this package of 14,999 for 27 months. And we also have a trading platform where you can also get access to that. So I'll request my colleague Jason to please drop the link of 14,999 and let's open the floor for question and answer. Over to you, Jason.
Yeah, I'll just pick this one particular question by Mr. Prasad, and I think a lot of investors are writing this. Sunilji, when it comes to the matter of giving credit to you, the fact that we follow you on webinar and blogs goes to prove we all believe and depend on you. Full credits to you for that, sir.
Thanks a lot, sir. पर सर आप लोग हमारी बजाते भी हो ना बहुत बार, अरे ये स्टॉक क्यों नीचे चला गया, अरे भाई हम भगवान थोड़ी है, the script will go down. We keep saying that 80% of time we will right, 20% of time we will go wrong. Please, and see, this is the market where the selling has been across the board, and sometimes, you know, out of emotions, you do write an email to us with a lot of anger and so on and so forth. And we request all of you, please remain calm and composed. This is not the market where you should get a little emotional. You should not allow fears to control your mind. So that's what my. But thanks a lot for your compliments, sir.
Okay, moving on to this one particular question by Mr. Rajeev. Hello Sunil, we have been hearing a lot on recession, stagflation, etc. quite a lot. Where exactly are we on those issues? Has a recession already set in?
So it's very difficult to say the recession has already set in for at least for the US economy. And see, remember, while we do believe that US will struggle in terms of growth, we don't expect that to happen with the Indian economy or Indian companies. India would be one of the brightest star in the gloom and doom scenario across the world. Why? Because of government reforms, PLI scheme, FIS coming back to the Indian equity market, resilient from the retail investors like you and me. I think Indian economy will do extremely well, and our balance sheets are not blotted. That we need to be a little worried about the kind of QE that some of the developed world did. India did not do that. So I think we should be in a very sweet spot in this gloom and doom scenario. So yes, I do believe that US economy will do hard landing. That's what my presentation says. But I don't expect that to happen in India. So India would be, and that's why I kept saying, if you remember, someone had asked me in beginning of 2022, and I did mention that US, how the Indian market will do vis-a-vis the US market. And I did mention that Indian market will do well even in dollar terms versus US market, and that prediction seems to be coming true at least for the first half of 2022. So that's what we believe. Yes, there will be recession in the US, but not in India.
Okay, this next question by one of the investors. If Fed rate will continue to affect market adversely, what is Markets Mojo's strategy on buy and sell?
So we will follow the same strategy that we are following. Tomorrow, we are launching our profit booking strategies, and we will come and explain you how we are going to do it, what are the methods that we are going to do it in complete detail. Remember, our approach has always been stock specific. We don't have any view on macro, we don't have any view on sectors, but we do have a view on the companies. And as I was mentioning you, that if you look at our stock of the month of last 4 months, they've done extremely well in the volatile market, and that all credit should go to our IP, and we will keep, and at the same time, more than 80% of the company that we advise you to exit have gone down further down, and then that's where we should take a lot of credit for that. So yes, sometimes we may ask you to book losses, but it's all in your benefit. We are asking you to book losses because that companies are going to fall further. I know many of you have basically questioned me on Tata Steel when we ask you to exit. And that at that point of time, the Tata Steel was in 4 digit to reach in 3 digit. Am I right? And hence our call to exit from that company, it's bang on, and we will keep doing that. So we are not going to change our strategy because Fed is going to hike the rate of interest. We'll follow our IP. Of course, that doesn't mean that we will not improve our IP. Whatever it takes to improve IP, it's a constant process that we'll keep doing it, whether Fed is going to hike rate of interest or no.
Okay, moving on to this next question. This is by Mr. Anil Jain. I think you also given an indication, but he says, Sunil Bhai, when can we expect the Indian stock market to start firmly moving upwards? By next financial year?
No, sir. I've said that. So normally I have a very bad habit of making prediction, and Mohit keeps saying, during lunch also he was saying, Sunil, तुम सर prediction के ऊपर prediction करते रहते हो, कभी सही नहीं हुआ तो, and that's a danger you always run. Am I right? There is a thing, this one, but that doesn't mean that you should not make the prediction because you can go wrong. I do believe that market will start inching up from October 2022. So you don't have to wait till the next financial year. Next couple of months, just bear this volatile phase, and market should start inching up from October 2022.
Okay, moving on. Question by Mr. Jagmohan. Sir, you had predicted Nifty at 15,000 to 15,500 and there's been a correction for Nifty. Is it done now or do you feel we are not yet done?
I think I still believe it can go to 15,000 level. I do believe that yes, we are between 15,000 to 15,500. That's what my prediction was. Am I right? I do believe that it is a possibility of even going down to 15,000 level. So there is some minor dip. But what's going to happen is not going to immediately go down. It will go up, further go down, go up, further go down. And somewhere at 15,000 level, it will make its bottom and then start rising. So next couple of months, market will remain in a very volatile phase, but in a narrow range.
Okay, this one particular stock question by Mr. MD here. He says, hello Sunil Sir, GAIL is a gas marketing company. What are the reasons that made you consider this as a Mojo stock?
So simple, our IP which suggests that this company should do well, and that's one of the reasons it becomes, I don't think it's a Mojo stock if my memory serves me right, but we do own this company in our model portfolio. GAIL. GAIL is no longer a Mojo stock. Why? Its score did go below 70 in claim, and hence it's not a Mojo stock, but we do own this company in our model portfolio.
Okay, this one particular question by Mr. Parichuri. He says, dear sir, when all data points are suggesting market will continue choppy, is it not wise to wait until September, get more clarity before parking new funds in Infinity, as currently Infinity is already under pressure and down?
See, try to understand. These are all the probable scenario. I am not a Nostradamus that what I am going to predict is going to exactly happen the same way. God has been kind to me, and many of our predictions have come true. See, the problem happens, if they assume that market is going to go down to 15,000 level or so, at that point of time, you will not even guts to have a put money. I can tell you why, because market would be in a fearful. So one of our Mojo Infinity customer, he today sent me, today morning he sent me a message, and I hope he's attending this webinar. I don't want to mention his name. And he talked about, let me tell you what he said. So there is one lady called, I believe it's Rupal Bhansali. 18 billion she manages. I believe Rupal is a female name, and of Ariel investment in US. And she sounded extremely pessimistic. 12 points that she made, and the 12 point, this will be a global correction, no market will be spared. Now this kind of news will not give you comfort level to put money in the equity market. So human emotions will come in play. So what we are saying, take out the human emotions. Please invest in a disciplined manner. Whether you invest now or whether you invest in month of September, in the long-term wealth creation journey, nothing is going to move much. 100 bips here and there in terms of CAGR. But what would happen, that fear has gone out. And what we are anyway advising in Infinity, if the amount is more than 1/3 of additional amount or new investment, we are anyway going 1/3, 1/3, 1/3. To assume that you start today, the first tranche will get invested today. Next after 1 month, that's in the month of July, and another one after 1 month from that day is August. So, but you cannot time to the perfection. No investor in the world has been able to time to the perfection. And please do that. See, not necessarily the market will exactly move the way I am saying. ऐसा जरूरी नहीं है कि 1 अक्टूबर से मार्केट ऊपर जाना चालू हो जाएगा. It can turn around by September also. It can turn around by August also. There is no perfect science. There is no perfect prediction I can make. This is my understanding that market should start inching up by October 2022. And if that's so, might as well start. Maybe you have to couple of more months of pain that you may need to see. But it's good to have that pain. Why? Because you are investing in the equity market for the long run.
Okay, next question by Mr. Jagmohan. Considering global inflationary situation, which sectors for India will do well? Asking because you have already ruled out IT, textile, cement, capital goods, export, metal, oil and financial.
Sir, right now looks very difficult to pinpoint which sector would be leading the rally by next. I was talking to one pharma analyst on my way to office today. He was sounding extremely pessimistic. He was saying that the prices of generics have come down by 10 to 15%. Competition is very, very high. And I think a lot of pharma companies will bleed. That's what he was saying. And even there is a competition increasing from some of the players from Bangladesh. He was making me understand that China is also gone in. Textile merchandise exports of textile will take a beating. IT may continue to underperform for next couple of quarters at least. So the companies that are facing domestic, they just domestic, where you cannot easily import the things like, I think they should do well. That's what my sense is. Also the companies which doesn't require any capex or opex, big capex, and having strong balance sheet, they should do well. Why? Because the treasury income will go up because the rate of interest is high. So my sense is that domestic focus and the company which has a good cash rich, good cash and bank balance in the balance sheet, they should do well. So my advice would be just follow Mojo Stock instead of trying to figure it out which company or which sector should do well. That's what my advice would be. Company specific, but remember market will remain choppy. And if you happen to be in the wrong company, even though your call on the sector will be right, but if you happen to be in the wrong company in that, I'm afraid you will pay a very, very heavy price. And again, I repeat, if you think that your portfolio stock will also go up, your personal portfolio will also go up as and when the market turnarounds, that's not going to happen. Be careful of the risk that you run into, and that's where you need a professional advisor to help you to create wealth from the equity market.
Okay, moving on to this next question by Mr. Chane. On what basis you are saying that US GDP will be less than 2%?
Sir, that's my prediction. Now, if you had asked me on what basis the Fed is going to do 75 bips, despite Powell saying no, it was my reading about this one. I do believe that, so if you happen to listen to what has happened to Target commentary or Walmart, there is excess inventory level with the US-based company, which does gives me indication there is a little slowdown. Number one. Number two, if my memory serves me right, I think two companies from the real estate in US, I think they have asked their employees to go. They have started retrenching the employee. Let me just figure it out if my memory serves me right or not. So I read so many things that sometimes I also keep forgetting what I read where and this one. 1 minute, I'll just try to figure out. Okay, Redfin and Compass, these are two housing market company, real estate company. They have asked a layoff. I again repeat, the name of the companies are Redfin and Compass. So those who are from US, maybe they can say whether this my understanding is right or not. So that also gives an indication that the real estate also started little cooling off in the US, which is not a good sign, which could be indication that growth in the US may be slowing down.
Okay, moving on to the next question. This is by Mr. Vineet. He says, I created an aggressive model portfolio for my mother of rupees 1 lakh on 15 June and today I added rupees 20,000. I have rupees 30 to 50,000 in standby. How should I allocate these funds now? Should I invest tomorrow if the markets go down or still wait for some time?
So you want to invest additional 50,000, am I right?
Yes, on a 1 lakh 20,000 investment.
Sir, then invest one third. That's what my request would be.
Okay. Moving on, this next question by Mr. Sarang. Following a suggestion, sir, thanks for your support. Can you post your current view on FMCG sector for the next year or so?
Sir, I did yesterday webinar on in the India Inc. numbers, and I did mention that we do believe that FMCG will continue to underperform. So if you remember, when the December numbers came out, I suggested March numbers will not be good, and that's exactly been the case. And I do believe that June numbers will not be good for the FMCG companies. Having said that, let me again clarify. Otherwise, आप लोग वापस यार आप लोग का आजकल क्या है बहुत खराब मूड में रहते हो. And then why ITC is a stock of the month? So let me clarify. Within FMCG, some companies will do well, and we believe that ITC should do well. So if you remember, ITC after being a stock of the month has been quite resilient, despite there has been a mayhem on the market. ITC has been very, very resilient. So FMCG will underperform. FMCG companies will come out with a poor set of numbers, but company like ITC will continue to do well. And that's one of the reasons we made ITC as a stock of the month.
Okay, and speaking about stock of the month, Mr. Jose is not that happy. He says, you are always talking about the last 3 stock of the months, but what if you consider the last 5 stock of the months? That means from Jan to May.
Okay, let's look at it. So I'll give you the exact numbers as we speak. ITC last 5, so let's start with the June 2022. ITC is down by 3.64%, but overall market has gone down substantially. Am I right? Coromandel up by 2.76%. That was May. April, Bharat Dynamics up by 10%. Up by 10%. Oil India, which is March 2022, it's up by 8.6. What we closed in the month of May, Nalco by 31%. We closed with the red. And Chane, we closed Eclux by 25%. So if you look at it, the 6 stock of the month that we did, 2 we closed in the red, 3 are in the green, and 1 which we just recommended, which we should not be talking about, but nonetheless it's down but outperformed the benchmark. So this is actual numbers that I'm presenting you in favor. Now remember what has happened. See, we are not someone who will afraid of accepting if our call is wrong. We will tell you to get out of that company. Why? Because if we think that company is going to underperform, we would rather admit mistake and cut your losses than, in the hope of that company will outperform. We believe that this company will continue. We ask you to continue to hold that company. We will never do that. So I hope that's clear. So this is the thing. If you think I've made some mistake or I've misrepresented the fact, please correct me, sir.
Okay, this next question by Mr. Raghavendra. He says, Sunil, you must be with us in these times. Do extend the 1499 at further discount as the market goes down now.
So what does he want, sir? We should expect 14
discount as the market is going down.
Sir, see, that's why I'm saying don't be, sir, penny wise pound foolish. मैं आपको क्या चाहिए बताओ मुझे. मैं आपको क्या 2000 रुपया कम कर दूँ, 3000 कम कर, that will make you happy. Think this way, how can I use this money to create wealth, na? And that wealth will be in lakhs and crores, am I right? So instead of asking for a few thousand rupees discount, you should think how can I create more wealth which runs into lakhs and crores on that amount. So don't be too much penny wise pound foolish. And sir, what are we saying? 14,999 for 27 months. 2 years and 3 months. उससे सर मैं ज़्यादा कब अभी क्या दूँ आपको सर मैं इससे सस्ता तो सर हम लोग को दुकान बंद करना पड़ेगा. Why? Because we will not be able to sustain our businesses also. So sir, it works out to 550 rupees per month, less than 20 rupees per day, which is very cheap price. So, sir, we will not be able to accept your request. Please pardon us.
Okay, this next question by Mr. Kedar. Since interest rates are going up, would it not be a good strategy to invest in bonds?
सर आपको तो नुकसान होगा ना बॉन्ड में, बिकॉज आपका जो लॉन्ग ड्यूरेशन बॉन्ड होगा उसका तो प्राइस गिर जाएगा. So I met someone who had come down to our office last week. There is a 15% drop in the bond prices in last 1.5 months, long duration. If you are going for a short duration, then it makes sense. But then, you are not going to get benefit of the higher. So if at all you want to go for bond, please go for shorter duration. Don't go for the longer duration. And those who have invested in longer duration, they would have seen the price erosion in the books. There's one more thing, I was today talking to one of our Mojo Infinity customer who happens to be the deputy commissioner at BMC. And I wanted to know, he was suggesting that we should little delay the webinar because you are not able to attend the webinar because either you are work or you are on a wait from office to the work, or it comes at a time your family.
Email.
Please click only once. So what we will do, we will try to figure it out what time we should be doing our webinar, because we want more and more people to attend our webinar so that you enhances your knowledge. That's the reason we sit late in the evening, just to impart our knowledge so that you people remain educated, remain calm, remain composed, and you don't get carried away by this market volatility.
Okay, I'll just wait for a few minutes for investors to write in their...
Sure,
queries.
yeah, we can do that.
Okay, I think we might have had a slight internet glitch. I'll just repeat the particular thing. In the query box below, just put in the time you are comfortable to come, 7 p.m. or 8 p.m. or 8:30 p.m. And I'll make a particular compilation of that, and then we can set the best time for the webinars upcoming. Mr. Sunil, I'll just quickly move to the next question as well.
Yeah, please.
This is by Mr. Twivket. He says, you've recommended Oil India as a Mojo stock, but it continues to nosedive. Do you still recommend we stay invested?
Yes, sir. And I think Morgan Stanley or someone today came out with the buy on Oil India. See, the reason is very simple. When the crude oil price goes up, Oil India is one of the major beneficiary of that, isn't it? So that's why we believe that Oil India should do well. And that's one of the reasons we picked up Oil India as a stock of the month. After becoming a stock of the month, it company did underperform. And then it started doing well. And it's up from the recommended level as a stock of the month.
Okay. This question by Mr. Hussain. Sunilji, what about the other headwind of the Indian equity market? FIIs are continuously selling, whatever the market trend may be.
So, sir, I have suggested Hussainji also in the past, and I'll repeat, we do believe that FII will come back very strongly. We are at the very fag end of FII selling, very, very fag end of FII selling. And in any day, they could become a net buyer. So I did have gone on the record by August or September, FII would be net buyers on Indian equity market. Jason just record this because as and when that happens, we can basically also broadcast it. I again repeat, FII will become net buyers by August or September in Indian equity market. So yes, they are net sellers, but we are at the very fag end of their selling.
Okay, I'll also make a note of that. This next question by Mr. Wilson. He says, if I want to invest rupees 10,000 per week, how do I go about? Can you suggest a strategy?
Sir, 10,000 is a little small amount, but what you can do, you can buy our Mojo stocks. So you can buy 10 Mojo stocks of Markets Mojo, because we don't want you to buy single stock. We want to buy basket of stocks because it will become a portfolio. So you can buy 10 Mojo stocks, 1,000 each. And based on the latest Mojo stock, you can either keep adding or buy new Mojo stock and create a portfolio out of Mojo stocks. That's what my advice would be.
Okay, this next question by Mr. Jagdish. Hi Sunil, more than rise in interest rates, the more important issue is quantitative tightening, liquidity being pulled out of the system all over the world. What's your view of this on India?
So that's one of the reasons I said I do expect and I do suspect that US economy can go into recession. I did mention that, am I right, sir? Because QTA plus higher interest rate can make it US to do hard landing. So that's a possibility. But impact on India, I don't think India will get, of course it will get impacted. I'm not saying no, but India would be among the fastest growing economy in the world because of this. So that's my sense is that yes, liquidity will get sucked out, but I think RBI will not suck out so much liquidity that it impacts the what we call the growth of the Indian economy. And remember one more point, India has not done any quantitative easing. See, if you have not done the quantitative easing, where is the question of quantitative tightening comes into play? And whatever the excess liquidity, RBI is going to suck out that liquidity. That's for sure. They've gone on the record that they are going to do that. So, but it's not going to disrupt the growth of the Indian economy to that extent that we need to be worried about it.
Okay, this next question by Mr. Tushar, he says, "Hi sir, as noticed only Mojo stocks have taken a beating today, while there are many other stocks that are up. Any reason why?"
Sir, I'm a little surprised with your statement. Okay, let me tell you. How many Mojo stocks are from Sensex? Do you know today, out of 30 stocks, 29 stocks have closed in the red in Sensex? And out of 29, how many are Mojo stocks? Just to give you another example, today in the BSE 500, 90% of the companies have fallen, 90%, 90. Why? Because 460 companies have fallen, so more than 90%, sir. 92%. Are that 460 companies are all Mojo stock? Sir, आप कौन से डेटा देख रहे हो मुझे पता नहीं चल रहा है. Where you are seeing only Mojo stocks are down, and sir, today has been a sea of rating all across the board. I'm surprised with your observation, sir. Please help me correct where you are seeing. In fact, on the contrary, some of the company like Fine Organic, which is a Mojo stock, is in green. Voltem Transformer is in green, which is our Mojo stock. So, sir, आपको क्यों ये नहीं दिखता है? Why are you able to see only the company which are in red but not in green? And which company? Solar Industries, which is a Mojo stock in green. VIP, which is a Mojo stock in green. Sir, please, sir, you are going looking at some wrong side. It looks like.
Okay, moving on, I'll pick this next particular question by Mr. Amar. So, Sunil Bhai, if FIs come back with a force, initial focus will be on quality and large cap, right? So, stocks like HDFC Bank, Hero MotoCorp, etc. will be in favor.
So, that's an assumption you are making, not necessarily, am I right? Not necessarily that they would only look at the institute that you talked about. No, I doubt that that's going to happen. Of course, they will invest in quality name, but that quality name could be from mid cap. That quality could be beyond banks and finance. So don't make an assumption that they will invest in HDFC or HDFC Bank. I doubt very much that they are going to do that.
Okay, moving on, this next question by Mr. Chaudhary says, "Sir, can you do a presentation on the trend of FI holdings and ownership of Indian markets over the last, let's say, 10 to 15 years, comparing the same against other emerging markets?" It's an earnest request.
So it's a good suggestion. Jason just jotted down. So tomorrow when we discuss for this webinar meeting, maybe we can explore this possibility. See, some data compilation may be an issue in the sense that what's happening in the emerging markets, we may or may not have the data. I need to see that. But it's a good suggestion, definitely good suggestion. We'll definitely explore that. Jason, how many has people responded with the time, preferable time?
Yeah, I can see a number of responses coming. I think I'll compile that and get back on the what exactly is working.
Okay.
This next question by Mr. Himadri, it says, "Some of the recent top stocks are down. Is that a good time to invest in those same stocks?"
No. I don't recommend that. Remember, see, never ever your decision to buy that company because it has fallen. You maybe end up catching a falling knife. Am I right? So don't do that. Look at the stock, Mojo stocks in terms of score and decide which stock you need to go. Reason to buy stock is not because of it's a fallen. Reason to buy the stock should be based on our Mojo score. And that's the way I would suggest you.
Okay, this next question by Mr. Wilson. Could you please provide your opinion on Reliance Industries?
I think the Reliance, the GRM should be extremely good for the quarter ended June 2022 because GRM has gone up substantially high across the world. And I think what has happened that the JV between Reliance and BP, I think they have started slowing down in terms of the fuel oil. Why? Because under recovery is there. And I've been informed that many places in the country, there is a shortage of petrol and diesel. I have just read that article. I don't know how far it is true. So Reliance would do well. That's one my, and I think we could see some kind of value unlocking that can happening from Reliance. So if you are holding Reliance, definitely you can continue to hold Reliance Industries as we speak, because it has a possibility of giving you returns as we speak. The score of the Reliance as we speak is 67 in our system.
Okay, this question by Mr. Farhan. He's asked, has your opinion on HDFC twins changed now?
There is no reason to change, sir. Whatever I stated at that point of time, it remains that. And if you would have seen, post my opinion, the script has continuously underperformed. On one day, it did move up when they announced that merger between merger of HDFC with HDFC Bank, but that one day movement did not last. Am I right? And the script is continuously falling. If I am not making a mistake, HDFC or HDFC Bank would be touching 52-week low. If I'm not wrong, let me just see. 1 second. Yes, it's 52-week low, HDFC Bank. And we believe that it will continue to underperform even going forward. And when I look at the 5 years return of HDFC Bank, it's only 53% versus the Nifty 50, which has gone up by 66%. So it's underperformed. It's underperformed for 5 years, 4 years, 3 years, 2 years, 1 year, and YTD.
Okay, before I move on, I can see a lot of investors asking who is this particular special guest coming on the Psychology of Event on Saturday. They can see a lot of banners on the website. Could you provide a small hint, Mr. Sunil?
So I'll give you the hint that the special invitee has never ever have come on Markets Mojo webinar. This person will come with a lot of different perspective on the psychology of money. So Mohit would be there and someone else would be there. I would not like to disclose that for the very simple reason it will take out that fun, that suspense will go out, and I don't want to do that. It's just a matter of 2 days. Today is Thursday, tomorrow is Friday, and Saturday and I request everyone, if you really want to understand this psychology of money, please come and attend that. It's a very, I know what they're going to discuss about because I've seen the presentation. It's a very beautiful webinar. It's an eye-opener, and I would request everyone to attend with the family, where Mohit and the special attendee will reveal some of the finest aspect of the investment that you have never heard about. So please, please, please attend this webinar and you'll thoroughly enjoy. That's my promise to all of you.
Okay, Mr. Avijit has asked this question. He says, SRF is out of the Mojo list, but today it's added to my model portfolio and SRF was one of the stocks. Is it a glitch or is it okay?
So, see, when company goes out of a Mojo stock list, it happens automatically, am I right? It doesn't, because why? The score goes below 70, ceases to be a Mojo stock. But we don't, it doesn't exit our master list. The company continues to remain in our master list. And if it is in a master list, that company can form a part of your model portfolio.
Okay, Mr. Sunil, that's with the Q&A session for today.
So, as I told you, the Fed is going to do the rate hike 75 bips by July 2022 and then 50 bips and then 25 each in next 2 meetings. That's what our prediction on Fed. We do expect market to remain a little choppy. We do expect market will find a bottom near about 15,000 by August, September, and post-October market will. So we are at the very fag end of that painful corrections in the market, and future looks little promising. If you have patience, then only you should come to the equity market, otherwise you should not. And if you are really serious about creating wealth, even if the market may go up, your portfolio may not go up. Why? Because you may not be able to participate in the rally. If you really wish to serious about creating wealth, please avail our 7th anniversary offer 14,999 for 27 months, 2 years plus 3 months. And start creating a wealth journey. I'll request again Jason to please drop the link. With this one, thanks once again to taking time out and attending this webinar. Thanks a lot, Jason, for hosting this webinar. Over to you.
Yeah, thanks a lot, Mr. Sunil. Just a quick announcement. There are 2 major upcoming events. I think one is tomorrow of the profit booking strategy. It's a Power Series event along with Mr. Sunil, our CEO and founder Dr. Mol Batra would also be joining us. And we also have an event on Saturday, Psychology of Money. Looking forward to seeing you all come for both the events. We'll be shortly sending invites for the same. Goodbye and have a great evening. Thank you so much.